Okay, well, we have Cameron Brandt, Director of Research at EPFR Global, now joining in to take some questions. Cameron, great. Thank you very much for joining us. Great to have you with us here on CNBC TV18. Are global emerging market funds seeing outflows, Cameron? Could you tell us what's been the picture so far in 2023? Because we get about 95% of our foreign money through these GEM funds. So what's going on?
So what's going on has been steady but not spectacular inflows into that particular group. From the Indian perspective, the fact that the flows have been sort of gliding downwards, and the managers of those funds have on average rotated some of the India exposure they built up late last year back to China. It isn't quite the happy picture it was coming into this year. But the flows in general to emerging markets are showing some resilience. Investors aren't running wild on them. But there's definitely, we're seeing some interest in corners of the emerging market universe that really haven't seen much money of late. The good news from a Chinese perspective with regards to their manufacturing sector certainly lit a fire this week under flows into dedicated China equity funds.
Cameron, hi, good morning. Could you elaborate on that? Because for us sitting here in Mumbai, from our perspective, one of the issues was that a lot of this foreign money was moving towards China and not necessarily coming into India. Valuations are the reasons we were a better performing market in 2022 and so on. In terms of flows, is China still getting the lion's share, or do you see some of that emerging market money now also trickling back into India, perhaps?
So since we last talked, what happened was after a lengthy period of China funds really getting the lion's share, we had a month-long period where we actually saw some outflows from dedicated China funds, while flows to dedicated India funds, again, while they haven't knocked it out of the park, they've been consistently positive week to week. But at the moment, the dominant emerging markets narrative is the China rebound. And investors seem, and this is broadly true, very hungry for any positive narrative to back. So I think going forward, until something else crops up, we're likely to see a reversion to the China first pattern to emerging markets fund flows.
Okay, so you're saying that you will see a reversion to flows going back into China, while India funds are still pretty consistent in getting the money?
Yes, yes. Flows to India haven't taken off to quite the degree I was expecting, but they've been very consistent, which I think is positive. Whereas flows to China at the moment have a certain feast or famine quality. Now, it's mostly been feast in anticipation of this rebound. But I think India is pretty well placed at the moment, thinking about emerging markets.
All right. Hi, Mr. Brandt. Shifting focus away from the equities then, what about gold and bonds? Are you seeing, this sort of a dicey market setup, are you seeing incremental flows moving to those asset classes?
As a matter of fact, I'm not, which I'm a little surprised about, certainly the gold funds. But I think that, and actually with emerging market debt as well, is a reflection of the fairly rapid retreat from the consensus that U.S. interest rates would plateau early and perhaps even start to decline towards the end of the year.
We'll leave it there, Cameron. Great speaking with you. Appreciate you joining in, and thank you for running us through what you're making of things, flows, etc. It's a pleasure speaking with you. Well, we'll take a quick commercial break, and we'll come back with our research team, which is standing by with CNBC TV18's list of top 10 stocks for the day. Stay with us.